Welcome. We've got a video for you on what's being forecasted for commercial real estate cap rates. I'm David Shapiro with the Shapiro Group in Austin, Texas, with my colleague Lee Abraham. And let's dive in. So what we're looking at here is CBRE's half one cap rate survey, and they had 3,000 plus cap rate estimates from 50 plus geographic markets. And so what did the data show?
So David, as we parse through some of this information, we're going to look at two high-level macro takeaways. Number one, no surprise or shocker, interest rate volatility pushes up cap rates. Uncertainty in the market creates that need for greater ROI to induce an investor to participate. And then the other key thing as it relates to what's happening in the market now is that cap rates have increased more slowly as compared to the second half of last year. So just as even the residential market in Austin is moderating and in a kind of a stable pattern as it grows a little bit, the commercial markets across the country are beginning to stabilize after the rapid rise in interest rates that threw the market into that state of heightened volatility. So things are calming down a little bit.
And yields will stabilize during the second half of 2023 due to progress on inflation and a belief that the Fed's tightening cycle will soon end.
So David, we saw a quarter point increase just a couple days ago from the Fed on the federal funds rate. And the scuttlebutt around the portals is that, by golly, we might have yet another quarter point increase before the year is over, basically factored into the interest rates that consumers are looking at and comparing and shopping. And so the hope is that we're almost done and that we can move into some real prolonged stability in our forecasts.
So let's take a look at the trends over four different sectors. Retail saw the smallest cap rate increase, aided by improved fundamentals, income growth, and attractive pricing.
And we talked about that in our most recent commercial video, where retail really is just such a great story in a kind of counterintuitive post-pandemic resurgence. And when you've got that kind of stability, then the cap rates are going to slow down just based on the fundamentals of the attractiveness of that asset class.
And then multifamily, I've seen an upward expansion of cap rates, which has also slowed, but oversupply is a concern with some markets.
Yeah, got to give more to induce those investors to participate in that multifamily market as we're moving into, as we are in the second half of this year. And so as we look at industrial, David, saying that the underwriting has grown more conservative for a similar reason, and we're talking about supply. You know, you're no stranger to the market cycle of development and how many years in advance you've got to acquire property, put the plans in place. And you know, the players that are developing property responded to the excessive demand that the pandemic created, and now a lot of those development plays are coming to the market, and we'll see how the supply and demand balance sorts out as those products are absorbed in the market.
And then no surprise that office cap rates widened the sharpest as investors demanded greater pricing discounts amid an uncertain outlook. So with the work from home trend, and the forecasts on the number of people that are permanently working from home now, or offices just giving more flexibility where they can do shared desks. So certainly less of a need right now for office. And so that makes sense why cap rates there saw the sharpest change.
And as you know, several of our clients recently have been acquiring office property because they're owner occupants, they're users. And so rather than leasing office space, there's an opportunity now, as the office sector has been hit a little bit, things are softened up a little bit, to acquire property at a bit of a discount compared to historic rates, so that if you're a business owner and you're leasing space now, you've transitioned that expense into an equity gain. And I believe that's a real strong opportunity for any business owners, entrepreneurs currently thinking about investing in real estate in the current market.
Yeah, and some of these office spaces that, maybe people think about these towers downtown that are hundreds of millions of dollars, but, you can get an office building sometimes for $1 million, 2, 3, certainly there's lots of options. in great areas, great parts of Austin for several $1 million. So it doesn't need to be a massive lift. It could be something, in the couple $1 million range.
Absolutely. And when you're dealing with those smaller mom and pop properties, there's perhaps more negotiating leverage depending on the motivation of that particular seller. And so real estate is all about that unique pairing of buyers and sellers and understanding the opportunity based on motivation of the other party. So I think there's a lot of opportunity there.
So let's take a look at the forecast for these different sectors. So the first one being retail, and we're adding hotel to it here for the forecast, bolstered by conviction and continued consumer spending.
Yeah, you're a product of the product. Traveling, being a consumer out there, engaging in commerce, it's happening. And there's a lot of pent-up demand that's been unleashed. So I think that is the on-point trend. And then multifamily, we talked about it a little earlier. It's kind of remains to be seen how the increase of supply will impact the market. But there is interest out there. There's plenty of projects that are being planned as we speak, and so we're monitoring that sector closely.
And then industrial, it's mixed, as anecdotal evidence suggests underwriting assumptions are becoming more conservative, especially for non-stabilized properties, so meaning properties that don't have tenants in them. Although I would be curious to know, you go talk local, that the Austin metro area, I have a feeling that industrial is still pretty strong, just from people we've been talking to that
Right.
are looking for space for warehousing or whatever their use is. So I think that's still very strong in the Austin area.
And then to wrap it up, office remains an outlier. We talked about it before. Cap rates are anticipated to continue to increase to attract interest among the investment community. And I gave my 2 cents earlier just about the wisdom of an owner-occupant seeking out good deals now, because they are out there.
So let's take a look at the forecast in a graphic sense here. So what we're looking at is we have hotel, and there's multiple bars. And so it's the different, classes of properties or how nice they are. So going from left to right. And what we see here is if you look at the different colors, so a decrease, so this is the respondents to this survey are forecasting a decrease. So for hotel, it's around 5%. You can see for the lowest class of industrial, it goes up a little bit. The lowest class of multifamily infill, which means it's within the city versus a suburban use. And then office, but there's basically nobody forecasting a decrease. I wonder if that's because it's already so low. And then retail in the lower ends of the retail spectrum, some forecasts for a decrease, but a little, not as much as you get to higher quality retail assets. And then we've got no change. So the majority of this is all no change. Here, I guess the majority would be a slight increase for CBD
Right.
office and suburban office.
Right.
And then, so the green is an increase. You can see the amount of increase there. It actually, the size of this bar, so the percentage it represents, seems pretty consistent across these different asset classes, right? It's the no change that's changing the most, ironically.
That is ironic.
And then you can see up here the increase. So as you increase the quality of the asset, the projection by professionals of what the amount of increase goes up. So here, this is a bigger increase. You can see 25 to 49 basis points. And then the red is the highest amount of increase, more than 50 basis points. So what you'll see if you look at just red is at the high end of each of these asset classes in terms of the quality of the asset, there's a bigger forecast for large increases. And I think the increases in CBD office and suburban office being the biggest projected increases is probably just because of how much they've dropped. So
Right.
professionals are saying, well, this is going to bounce back hard because there's been an overcorrection there. So that's interesting. Right. So if you were trying to target something to buy here, you might say, okay, well, if everybody's projecting that office is going to be the biggest bounce, then maybe that's where I target. Industrial being another good area to go after. Infill, so meaning it's within the city, you can see that's projected to do better than suburbs for multifamily.
Yeah, so just at a high level, as we look at the color coding of this particular chart, there's a lot of optimism out there. And where we don't have optimism, we basically have indifference, where it's believed to be stable. Not a whole hell of a lot of pessimism as you just look across the board. And I think that's consistent with what we see in our client base as we're dealing, with buyers and sellers, investors, is that there's plenty of opportunity out there. It's not doom and gloom necessarily. Sure, there are some individuals that, depending on their dynamic, may not be where they want to be. But as a whole, there's plenty to look forward to, and it seems like the trends are moving towards stability across the macros, and certainly here in Austin. So David, with that, we have been doing more and more commercial work. We've been encouraged by the feedback that we've received from people that are watching our commercial real estate videos. We enjoy it. We've got a background in this type of stuff, and we think that it is meaningful to not only talk about the residential market, but the commercial market, because they're so intertwined. And for those that are looking to create wealth with real estate, there's a lot of opportunity here. And we would like to speak with you if you're considering purchasing, investing in multifamily, office, industrial, any of the above. That's one of the reasons why we do these videos, is so that you can find us and we can be introduced to you. So with that,
yeah. For those of you who have reached out, it's been really nice chatting with you and talking about your goals in commercial real estate. If you're a commercial real estate investor and you want to talk more about Central Texas, please don't hesitate to reach out. You can book a call with us right in the description, shoot us a text or an email. All of our info's below in the description as well. And if you got a lot out of this, please comment with any questions you have, or like it, share it with a friend, and go ahead and subscribe to the channel so you can check out what other videos we have coming soon. And we look forward to seeing you there.
Thanks, everybody.